Right now, somewhere, a company is making a move in plain sight. The street reads the headline. Autonomy AI sees the signal. We deliver it before the market catches up. Autonomy AI. Your models, our intelligence. Request a private strategic briefing at AUTNMY.ai.
Rob, great episode last week of Autonomy Signals. We got some really great feedback. And this week, Omega, a proprietary AI algorithm that you and I created, it uncovered even more signals. This autonomy economy is really starting to emerge. This week, Omega uncovered that China is preparing to spend $400 billion on robotics in 2026. Their exports of automobiles are surging despite the global headlines. While they're surging, their Robotaxi expansion continues on. And Omega uncovered that there is compute costs coming on the horizon. Costs are going to increase, but let's start with China to spend $400 billion. That's B with a billion in this year on robotics. What do you make of the news coming out of China?
It's amazing how much impetus that the Chinese government has put on succeeding in the field of humanoids right now. One of the latest things that they're pushing and you're seeing out of China is EV manufacturers sharing the cost, sharing lines, sharing supply chains with humanoid robotic manufacturers. I think we saw out of a few reports that Omega was able to uncover that Xpeng has been able to reduce their labor costs by 35% by sharing intelligence, sharing supply chains, sharing manufacturing processes, and sharing manufacturing lines to build the humanoids that then help build the vehicles, which is tremendous. I make of it that China is intent on winning this race. And what that means is they want to put out as many cheaply made, high-performing humanoids out into various uses, mostly for industrial uses, to help reduce their own cost of labor, to help increase their efficiencies, but also to flood the markets that are available to Chinese technology, which include the Middle East and Southeast Asian markets. And so with this reduction in cost, these economies of scale that they're producing, Xpeng is also producing or building, as we understand it, a 110,000 square foot facility that will be dual purpose for this manufacturing process. We're seeing China really, really put its money and its effort behind succeeding and making China the premier place for intelligence that powers humanoids and the physical infrastructure behind building humanoids.
You're seeing it with the Kimi models, the DeepSeek model, the Alibaba Quen model, that they're open sourcing, that their intelligence from a digital perspective is getting very strong. And we all know that China's currently the leader in physical AI. Look at Unitree robots that are shipped all over the world. And to give you some more context, Xpeng wants to produce 1,000 humanoids a month by the end of the year. So that's large numbers. The conversion of the factories sounds very familiar. It's like, oh, were you listening to Mr. Musk do the Fremont conversion? Okay, we're going to shut down the S, we're going to shut down the X, and we're going to make humanoids. It seems that China's deploying the Tesla playbook. Am I reading the tea leaves right here?
I had the same thought when I uncovered the report that Omega produced for us. And it led me to believe two things. One, will U.S. domestic manufacturers, other automotive producers and suppliers look to continue to investigate how to have the same type of model that Tesla is doing and what China is picking up on? So that's a signal right there. Like, hey, let's investigate and keep an eye on some of these folks like Stellantis and GM and Ford to see, as they're trying to figure out what to do with some of their factories that were intent on making EVs not so long ago. Can they be used for another purpose right now? And the interesting thing is, will there be tie-ups as we talked about last week with, rare earth magnets being more difficult to obtain from China and some of the structural impediments to relying on a Chinese supply chain as all of this stuff starts to get more localized in the United States, will we see more tie-ups of this in the future? Because the economics of scale right now are in favor of it, and we're seeing this in real time out of China.
We are seeing it in real time out of China, and it's not just Xpeng that's doing this. It's also Xiaomi and Chery, which I never heard of until we did the research in Omega, a Chinese auto manufacturer. They're doing humanoid robots to complement on the factory lines. It just seems that I'll use the term national pride. It seems like there's a lot of national pride in China. Say, yes, we want to build and export electric vehicles. We want to build and export autonomous vehicles. And oh, by the way, yes, we want to build and export humanoids to the world.
For sure, 100%, right? And you're seeing it. All of these things suggest that China is intent on lowering their unit economics, increasing their physical AI model training by having more of these humanoids and other things out there, and then applying the learnings across many different sectors, right? Which suggests that they're likely to get to commercial maturity faster than just the U.S. Domestic manufacturers of humanoids or other products. And they're also creating a structural margin deficit for the Western OEMs that are in these fields. And so if you can get your product out there and you can get it out there faster and cheaper, there's going to be more adoption. And we're seeing this already in what we'll get to later on in this conversation, which is adoption of autonomous vehicles. In these non-Western aligned markets, Southeast Asia and the Gulf states in particular, what you're starting to see is Chinese dominance with this technology. And it's not only coming in the form of AVs, it's now focused on humanoids. And then it's also going to be focused on the large language models. And what they're trying to do is establish the global standards outside of the Western Hemisphere on hardware, on software, on all of the different legs that go into producing an autonomous product.
Right. And the bottom line here is that China has grand ambitions. I don't know any other way to describe it as grand ambitions. And part of the Omega and the reports that it generates, it does risk factors for us. I want to go through some of these risk factors that it generated for us. It said that China's massive state subsidy injection and domestic deployment scale, installing nearly 300,000 industrial robots annually compared to the United States of 30,000, creates an insurmountable data and hardware iteration loop. This asymmetry threatens to leave the U.S. domestic robotics industry permanently behind in unit economics and physical AI model training. That's a very interesting risk that Omega uncovered there.
It is. And it is hard to overcome those things as a U.S. domestic manufacturer right now, both because of some structural things that we've talked about a few times last week and already on the podcast today, but also because of the government support, right? We are, a little bit messy here in the United States when it comes to government focus and government priority of these technologies. We certainly lead the world in venture capital funding and capital funding for these technologies, right? Which is a huge advantage for us globally. But in terms of the government prioritization of these efforts, it's a little bit messier here in the United States. And we're seeing a little bit of that play out in the United States Congress this week, where a new bill was introduced by Senator Cotton from Arkansas and Senator Schumer, the minority leader of the Senate out of New York. So a Democrat and a Republican, that puts a prioritization and a prohibition on U.S. executive agencies, meaning Department of Justice, Department of Homeland Security, Department of Defense, from purchasing unmanned ground vehicles and other autonomous systems that are either produced from what they call a covered foreign entity, which are basically 4 countries, China, Korea, Iran, and Russia. And it's also bans them from operating it. So even if they didn't directly use federal funds to purchase it, if they come into possession of it, they say they can't operate it. Now, there are some provisions that allow some exceptions to that. But overall, what you're seeing is I think a signal that there is a fear from the United States government that China is advancing in the field of unmanned systems, whether that be ground vehicles, humanoids, autonomous vehicle, faster than the United States, and perhaps better. Now, I don't think the language is meant to directly say that we're behind, because I believe that both of these senators are very much behind U.S. innovation generally, even though specifically, we can get into it at a different time. They may have had issues with certain technologies. But I think what that reads to me is that there is a fear that China is advancing faster in these areas than the United States. And that is, I think, something that we're seeing this signal suggest to in terms of its commercial advancement. But the US, at first, their first policy response is to say, well, let's not use this technology in our military and official government capacities because we feel there's a danger in using Chinese technology in that way. I will caveat all this. That is just a signal, as we all know, or as many of us might know. The United States Senate introduces thousands of bills a year. The Congress introduces thousands of bills. And the likelihood of any particular bill becoming law is less than 1%. And I'll just give you the numbers I looked up this morning. As many folks might know who know me, I spent 15 years in the United States Senate. There were 14,600 bills introduced in this 119th Congress to date. So the 119th Congress began in January of 2025. It ends in December of 2026. So 14,000 plus bills. A total of 81 bills have become law. Of that 81, 24 of them are resolutions that really only apply to the House and Senate itself. These are things that when President Trump was elected, the Republican-dominated House and Senate said, hey, let's do what they call a Congressional Review Act of certain actions that took place, executive actions that took place under Biden. So 24 are of those nature. So we're talking 57 bills. So the likelihood that this bill goes anywhere is less than zero. Literally, it's like 0.3% chance. But I think it does signal that some of our leaders are very concerned about where investments that Omega uncovered, the dual purpose manufacturing crossover between EVs and humanoids in China is becoming a serious concern for the United States government.
It's becoming a concern. Senator Cotton is a well-known China hawk, and if you read Senator Cotton's public statements on the bill introduction, he talks about using the certain robotics, the unmanned robotics, as a backdoor to spying. We did have a bill previously around DJI drones, which were eventually banned from Department of War. The likelihood, as you said, is next to zero for all essential purposes of actually getting the bill through. But to me, the signal that Omega surfaced for us that Congress is paying attention. You have the minority leader and Senator Schumer, and then you have a Republican and Senator Cotton that are coming together. And as we know from previous legislation, the China issue can be bipartisan depending on the angle there. That's the policy angle, and you were spot on that. But then here's the manufacturing angle that Omega surfaced as a risk that I want to get into with you. It says that Chinese EV makers are sharing manufacturing equipment, processes, and supply chains between intelligent vehicles and humanoid robots. This shared infrastructure drastically lowers fixed costs and accelerates commercial maturity faster than standalone U.S. robotics firms can manage, creating a structural deficit for Western OEMs. The signal from Omega is right. And when I say the signal is right, let's remove Tesla from that because they're very publicly building humanoids. And let's also remove Hyundai from that. They had the plant in Savannah, Georgia, where they're very publicly deploying the Boston Dynamics. With those two OEMs, one's a more traditional OEM, South Korean OEM, and one is an American innovation robotics company. I don't view them as an automobile company. You have experience here. When does GM, Ford, and even Stellantis say, okay, we need humanoids if this Omega signal does hold true?
Look, I think, right, they're going to have to start investigating it relatively soon. I think automation has been a part of the U.S. domestic manufacturing process, right? Let's not kind of hide the fact that if you walked into a Ford plant or a GM plant today, you'd see a lot of automation on that plant floor. I think what we're talking about is additional facets of the process being automated, as well as adding another use for that line. So not just building a vehicle through automation, but building additional humanoids and other industrial automation robots that can then be used to help further automate the plant. I think given what we've seen in terms of their pullback in EV manufacturing, what we saw today, there was a report in the Wall Street Journal about Magna and one of its big factories laying kind of fallow for the last couple of months as that EV pullback occurred. We've got some open plants that has state-of-the-art manufacturing in it. Now, it is a long process, 18, 24 months to perhaps repurpose them to do both things at the same time. But I think there's an opportunity here, particularly as we look to, as the United States, and if you're an OEM or you're anybody in this automation space, to look to cut costs, to reduce your risk on supply chains and things. A lot of things are going to be localized going forward. So I would say they would at least explore an opportunity here, right? There's plenty of hardware manufacturers on the humanoid side that I think can produce some pretty interesting numbers on their own. But if they really want to produce at scale, there's a potential, I say, for perhaps aligning the use of these kind of fallow but modern factories that are out there. And now I have no inside information, but you look at somebody like a Rivian, right? Or you look at somebody like a GM, and then you see some of the folks out there like a Figure or others. Is there a way for those two to join forces to get these economies of scale, to reduce these costs, to share intelligence amongst the humanoids and the EV manufacturing process, to share costs along supply chain considerations? I think it's an interesting signal that Omega is putting out there. We'll have to continue to watch it and look for additional signals, but we'll see.
It's a very interesting signal to watch with the Figure AI. They were deployed at the Spartan BMW plant. They put out a public post. I don't recall which factory, but they're going to another factory. We're seeing reports out of Germany where German automotive companies are looking at deploying humanoids. So we're starting to see that market emerge. And when I say that the signal's there, when I put on the capitalist hat, we look at all of the write-downs that Big Auto, that's the German auto and US auto, had to take write-downs on EVs. Are they gun shy? Because I could sit here and make a very intellectual argument for you, and you and I have talked about this offline many times, where instead of going all in on EV, they should have went all in on AV, and they'd be potentially a different company. So there's a lot of signals to watch, especially around how these large auto manufacturer companies are being managed. What are they doing for buybacks? What are they doing for dividends? And where, most importantly, where are they investing and where are they doing partnerships? Which brings us to Omega's take, because Omega's got a great take on this here. Omega assesses that China's $400 billion subsidy package in EV robotics convergence ensures China's humanoid platforms will achieve commercial viability and scale 24 to 36 months ahead of U.S. counterparts. Global commercial markets will be flooded with heavily subsidized, highly capable Chinese units. Conviction is high that a standalone U.S. robotics hardware startups lacking automotive manufacturing synergies will face a mass extinction event by 2028, partially due to BOM costs, the bill of materials cost. If, as we talked about last week, the Omega's picking up on early signals in the supply chain, that could happen. If Omega's take is right, this is hypothetical. Could we potentially see a global OEM acquire a humanoid company, very similar to how we saw Hyundai acquire Boston Dynamics? I think it was from Alphabet they actually acquired it from.
That's right. Yeah, I mean, I think that is something Omega might be dead on a couple years out from now. We might see a lot more of this. It makes, like you said, it makes intellectual sense to some degree, but it is a very difficult commitment to make if you're sitting in the chair of a CEO of an OEM, right? And there's been so much volatility in the last few years in terms of your investments in EVs and AVs. That's both in terms of the structural things that we've talked about, whether it's supply chain, whether it's geopolitics, whether it's tariffs. It makes it very difficult to go all in. But if you're bold enough, I think we'll see a few of these folks at least investigate what's going on there. Or we might have some smaller things. We saw a lot of this with the early battery technology, right? Where you had OEMs and others announce a series of kind of smaller joint ventures together just to see and explore what could be possible. And I think we're going to see more of that. I think Omega's right.
I think it's fair to say, and I think a majority of our audience would agree with this statement, being the CEO of a global auto manufacturer is a very tough job right now. I don't think there's any other way to say it. And so we need to look for public statements from the CEOs on their earnings calls to try and uncover some of the clues there. Or if perhaps we see a global OEM do an automation and autonomy day, and perhaps they showcase something, that is a sign to look for, which brings us to the signal number 2. We're staying in China, but we're going from humanoids to vehicles here. This was fascinating that Omega uncovered. Chinese automakers exported a record 7.1 million cars in 2025, with nearly 50% having highly advanced versions of ADAS. For the audience that doesn't know what ADAS is, that's Advanced Automated Driving Systems. And that's good, but here's the kicker on this. The vehicle exports are surging 48% year over year between January and February alone this year. 1.35 million units were shipped out of China globally. China's automobile industry is accelerating their exports.
Yeah, I think part of that is by necessity, right? There is an intense price war going on in China between BYD, Geely, Xpeng, NIO, Chery, and others. So the margins that they're seeing out of places like Europe and Brazil are starting to become even more attractive. Even though some of these places, are their vehicles are a little bit more expensive than they are in China for various reasons. The margins are coming in, and the signal that they're telling the Chinese manufacturers is there is more to be had in these outside regions. And given their manufacturing capacity, they can turn this on and start to sell these units. And look, you and I have heard anecdotally, we've seen it in person. Some of these vehicles are highly impressive, and they come, even with a tariff or a tax on it, are still cost competitive versus some of the domestic vehicles that are available in these markets, or even some of the other foreign manufacturers selling into these markets. And so it's I think we're going to continue to see, we just talked about it with the humanoids, right? There are certain non-Western aligned markets that are really ripe for cheap, highly advanced goods from China. And the Chinese are starting to see the signals that this is a place to earn good money. And so these exports, I think they're only going to be increasing over time as those margins continue to improve, especially if this internal competitive war for China in terms of their price war moves forward.
If you look at the quality of the vehicles, Jim Farley last year did that interview with the Wall Street Journal about the Xiaomi car, and he didn't want to give it back. Mr. Farley's telling the Wall Street Journal, I'm the CEO of Ford. No, I don't want to give back my Chinese-made Xiaomi car there. And if you see other reports from other analysts that you and I read, and the general reviews of the Chinese vehicles they're manufactured very well. When I say that, they do have issues, as we saw with BYD's God's Eye and the issues that they've had, but overall, from a manufacturing standpoint, the reviews are generally very positive. And Geely, for example, they want to export 640,000 vehicles this year, following a 240% surge in electric vehicle exports last year. It says, okay, the price, we're having a price war at home, margins are getting constrained. Oh, by the way, let's go ship to Europe, let's go to Australia, let's go to South America. that's only accelerating. So that's on the, you want to call it the passenger, the traditional automotive side. And then you have the robo taxis that are starting to get exported and accelerating. And as you and I've talked about many times, Europe is becoming the home of Chinese autonomy. Do we continue to see that expand, or what signals did Omega uncover there?
Yeah, I mean, look, WeRide, Pony, Baidu. Every time I see an announcement that's outside of the United States, it involves one of these companies. I mean, Waymo has a few things going on internationally, but what we're increasingly seeing is the Uber, Lyft, and Grab, the consumer networks, so to speak. The Chinese folks are partnering with these already established, regulatorily approved consumer networks, and they're becoming the kind of technical layer behind the distribution layer. And so, we've seen it with what Baidu and Lyft announced last week that we talked about, what we see Uber and Pony and WeRide and what they're doing over in the UAE. And now we saw just the other day Baidu and Grab announcing things in Singapore. And, what this tells me is that slowly but surely the Chinese are embedding their technical achievements into various layers of these European and Eastern Hemisphere transit systems. And as that happens, as people get more accustomed to the advancements and the achievements and the benefits that come with this technology, the more embedded that the Chinese become as the leader, and those that the European networks look to, European regulators will look to say, well, if we're going to discuss regulations in this area, we should be talking with the Chinese. We shouldn't be talking with the Americans. And so that gives, I think, the Chinese, folks in this space a leg up in terms of what are going to be the global standards for the hardware and the software. And I think I would say that's not an unintentional result here. I think this is a very intentional way for Chinese technology to enter these markets in a less friction-filled way than some of the American technology companies are doing.
I'm going to put my hat on, and not to toot my own horn, but on the Road to Autonomy podcast about roughly a year ago, I coined the term Autonomous Belt and Road Initiative, where I bring that up today because if you look at the historical Belt and Road Initiative, China invested heavily in the Congo. And why do they invest heavily in the Congo? They wanted access to critical minerals, especially cobalt. If you read Henry Sanderson's wonderful book, by the way, Volt Rush, he talks about seeing more Chinese restaurants in the Congo than Congolese restaurants, and how that was a sign, and the security guards guarding these facilities were Chinese. So obviously, why do they do that? Because they control 90+% of the rare earth, and that helped accelerate China's push into electric vehicles. Now I believe that they are taking the similar strategy from Belt and Road and making it autonomous. And I say that because Omega's uncovering some really interesting signals in Europe as it relates to autonomy in China. They're not just exporting electric vehicles. They're not just exporting autonomous vehicles / robotaxis. They're investing in building plants. They're doing partnerships. They're planting a flag. They're investing in the local community. They're investing in countries throughout Europe. To me, there's a lot of similarities here for the signals that Omega is uncovering to what we historically know with the Belt and Road Initiative.
Agreed. And what's really interesting, right, is one of the reasons to kind of put your assets locally is to reduce this friction of entering markets and saying, hey, I'm going to bring my technology here, or I'm going to bring my hardware here, but I'm going to build it somewhere else. I'm going to refine it somewhere else. I'm going to perfect it somewhere else. And I think what we're seeing more frequently than perhaps in the last 20 years, where we were focused, or 30 years focused on kind of this globalization, is this kind of retreat into a little bit more of a localization, regionalization. So if you're able to come in and say, hey, not only, yes, I might be a Chinese manufacturer and I might have Chinese AV tech on it, but look, I build this vehicle in the region here in the United States. I have a plant, whether it's in Brazil or Germany or somewhere else, Croatia. I store all the data here locally, right? Yes, I do kind of have a training model that I use, but I train it with data that's just from this area. You have access to it. We're not sharing it. Now, people who are critical of the Chinese will say, well, they'll say all that, but that may not be true. We're not getting into that here. But by being able to say, hey, I'm in your region, I'm invested in your region, I'm willing to kind of adhere to some more localization requirements, this smooths the entryway in for this technology. And then once it's embedded, right? It's that old line that comes to me, right? If I owe the bank $5,000, right, that's my problem. But if I owe the bank $500 million, that's the bank's problem. And so if China is able to get in kind of in this manner slowly but surely, and then build up sort of the industrial base there, build up the technical base there, build up the data layer base there. Europe has nowhere else to go, right? They've kind of just taken over the tent, and Western manufacturers and Western technology has to be able to respond to this more quickly than it is if they want to compete in these markets in the long term. I mean, you just look at the Middle East and you look at what's going on in Southeast Asia, and the Chinese presence is overwhelming compared to what the US is doing right now.
Yes, and you can even make the analogy that they're using the global ride-hailing networks as Trojan horses to enter that market, because it's not their branding on the app. It's something that the individuals are familiar with in those markets. So it could be perhaps a Trojan horse strategy. But if you look at it from a local politician perspective, or let's go down to the city council level or the municipality level, if you're a Chinese controlled entity and you're investing X millions of dollars in the community and creating X number of jobs, you and I know that's very hard to rip that out of the community. Once that money starts flowing, it says, okay, now they've got a policy edge. Am I reading that right? They're investing in the community. They get a policy edge as well.
I think so, right? And you know, you're starting to see, you know, the U.S. folks understand this a little bit more directly, right? I think the manufacturers, the OEMs, traditional OEMs, knew this a long time ago, right? They used to have plants in Italy and used to have plants in France and other places like that. But the economics of that business have kind of forced them into a more regional markets. But you know, if you have the ability and the fundraising and the state support to go in and invest and bring jobs and build things and build out programs and things like that, of course, the people that are there who are benefiting from them are going to give you a more willing ear than they are folks that aren't doing those things.
And then build's the key word, because if you look going back to the mainland China, you're building Chinese influence, which the mainland, this is my assumption, will fully support. Omega's got some really great takes on this, and it's truly amazing that what you and I built with Omega and proprietary research, what she's able to uncover. And I want to go through some of the takes that Omega has on this. This is to start with the first one. The immediate economic implication is a structural shift in how autonomous vehicles are deployed globally. Shut out of the U.S. market by national security bans, Chinese AV leaders Baidu, Pony AI, and WeRide are executing a highly targeted expansion strategically focused on the Middle East, Europe, and Southeast Asia. By acting as the underlying technology enablers for Western ride-hail giants like Uber and Lyft, these Chinese firms bypass the massive customer acquisition costs and local operational friction that typically stall international robotaxi expansions. You said it earlier. You're right. Omega's spot on this one.
Agreed. And I think what will be interesting to see is if the pace of these expansions increases, both in terms of the number of them, but also what does it mean on the ground? And that's something that, you know, you've been great at throughout the history of the road to autonomy, which is really understanding what is real, what is not. And look, I'm not saying all of these announcements are going to come to fruition and be real, but what we are seeing is the signal that there's a more real willingness and perhaps financial capability and government backing to try these expansions. And so we'll continue to put the feet to the fire and unpack, how are these things working? We've got announcements of 2,000 WeRides being deployed with Geely coming up soon in a European market. We'll see. I mean, I think we will put the same kind of scrutiny on if that is actually real or not. Will I have drivers in them? Will it be driver out? Where are their depots going to be? Where are they going to get the electricity? All that kind of stuff. But I think what we're seeing is a more aggressive approach to international expansion coming out of China right now.
Yeah, and as you and I grow the road to autonomy together, we're going to continue to do more field reports and actually go in the field and report on that and combine our field intelligence with our Omega intelligence, which brings us to a really interesting one that is highly debated because this is a really good take from Omega as well. This dynamic fundamentally alters the global competitive landscape by bifurcating the autonomy market. While North America remains a walled garden, Chinese software is rapidly becoming the default operating system for next-generation transit in Eastern Hemisphere in Europe. Furthermore, with China controlling roughly 90% of the global automotive LiDAR market and leveraging massive cost advantages, Western OEMs face a severe potential margin deficit. Chinese auto manufacturers such as BYD, Xpeng, and NIO are aggressively exporting consumer EVs, which we spoke about, pre-installed with Level 2 Plus ADAS, turning smart driving tech into a primary global differentiator. Omega's right because this is hypothetical again. Over time, with software updates, those systems become level 4, and then all suddenly, a large swath of vehicles in Europe are personally owned autonomous vehicles that are made in China. That's like, okay, here we go, back to autonomous Belt and Road. Check.
100%. And we've seen this playbook before, right? I mean, we can look at Huawei and its communication systems, and it's embedded throughout Europe, right? And so I think this is a tried and true approach from the Chinese. It's intentional. I'm not saying there's anything nefarious about that, right? Don't read me wrong. I think for folks that are looking at, how do I evaluate, placing my capital, whether it's venture capital or other capital, right, equities and things like that, into autonomous systems and the infrastructure and other plays that are around autonomous systems, it is important to know kind of where folks are targeted at, where are they perhaps going to get a more receptive target, and what that might mean for further investment there. And I think what we're seeing is the signal that China is going all in on external exports of EVs, but also going all in on international expansion in these markets such as the Middle East and Southeast Asia, to start to really lay the infrastructure for domination of those markets in terms of hardware and software.
If you look at it, China's basically, for all practical purposes, trying to become the de facto standard for deploying autonomy global, which brings us to our final signal here, regulatory, your wheelhouse, because Omega's got a really good take on the regulatory environment of this year. The regulatory angle most investors miss is the strategic use of multi-point penetration to sidestep geopolitical friction. While the European Union tightens data privacy laws via the GDPR and the Cyber Resilient Act, Chinese AV firms are embedding their technology directly into European mass transit operators and European automakers. Simultaneously, they're utilizing the Middle East with its pristine infrastructure, sunny weather, and deep-pocketed sovereign wealth funds as a receptive launchpad to prove commercial viability and achieve scale velocity before Western regulators can mount a unified response. We've seen that momentum with Mercedes. We've seen VW invest in Horizon Robotics. We're seeing the WeRide deals throughout Europe, mass transit. Omega's picking up on signals that we're not seeing covered anywhere else.
Agreed. And I think, if you want to understand where your returns are going to come from in the autonomy economy, you got to listen to us. That's all I'll have to say.
I like that. See, listen to us and reach out. If you want to learn more about Omega, it's alpha at AUTNMY.ai. We can walk you through the platform and how we uncover all this intelligence, which brings us to signal number 3. And this is going to be an interesting signal for interesting times. I'm not going to give you the tale of two cities. It was the best of times. It was the worst of times. I'll give you, it was the most interesting of times. Signal 3 is, we are potentially seeing an increase in compute costs. There are several reports that came out this week that AMD and Intel are looking to increase the price of compute, the chips, by 15% this year. That's a pretty significant jump. Oh, and by the way, there's a global shortage on these chips just based on the demand.
Yeah, I mean, look, I believe this is perhaps the beginning of a compute cost inflation cycle. I think it is well known. We've heard other folks speak about it in various platforms. We've got a crunch coming, right? So demand is outstripping supply here in all sorts of respects, right? We've got longer wait times for chips. We've got higher compute costs. And I think raising prices is one way to hopefully throttle this demand a bit. Now, I don't think folks want to turn anybody away. That's not what I'm saying. But given what you're seeing from the demand side of this, it only makes sense given the costs of adding more capacity, adding more ability to build chips, to process them, to package them, to increase your costs to cover future build outs and things of that nature. And so my sense is that these costs, once they go up, they're unlikely to come down for a bit. I don't believe this is a temporary increase. I believe this is where the cost is. This is the new floor. The question is, how long do other folks take to raise their costs as well?
Do other companies follow? And you see the reports out of China with their overtures towards Taiwan. That is a major risk because 85% of these advanced chips for AI and GPUs come out of Taiwan. We see what's happening in the Strait of Hormuz right now. You've got the Strait of Taiwan, and it's like, oh boy. You look at the oil markets, whoa, that 15%, if that does happen, that's going to be a lot more than 15%. That's another risk that we have to watch as this market evolves and these price increases go through.
Yeah, and I think, what you will also see kind of goes back to what we just talked about with our first signal, which is where else, if these costs are going to go up, and you're seeing as a manufacturer, you're seeing your overall costs exceed kind of planned expenditures for the year, where can you kind of claw back some additional expenses? And what we talked about with our first signal is that what you're seeing is a potential more efficient, less expensive ability on the manufacturing side if you combine certain supply chains and you combine certain processes and you combine certain intelligence, as we saw with the EV and humanoid combination that's coming out of China. So I think when costs get high or particularly too expensive for folks, that forces a rethinking of where else you might be able to save money. And I think Signal 1 and Signal 3 play well together as a chance for manufacturers and others to look at how do I reduce other costs if this cost is going up.
And tie that all together, Omega's take on this, which really does a great job of overlapping with last week, and she says, the bottleneck has shifted to physical components. The primary constraints on the autonomy economy are no longer software or LLM capabilities. They are ND-FEB magnets, high torque actuators, and advanced semiconductor packaging. That basically puts a bow on everything we just we described here.
Indeed. Said it more succinctly than I did.
Omega was great this week. Uncovered signals in each and every week. You and I are going to be here uncovering the signals that we learn in Omega. And if you're interested in learning about Omega, please send an email to alpha@autnmy.ai. That's alpha@autnmy.ai. The future is bright. The future autonomous. The future is signals. Rob, another great episode, sir.
I loved every minute of it. Appreciate whenever I get a chance to see you and have these discussions.